The Nasdaq Riga, formerly known as the Riga Stock Exchange, is Latvia's only stock exchange. Nasdaq, which also owns exchanges in Denmark, Sweden, Finland, Iceland, Lithuania and Estonia, owns it. The Riga Stock Exchange, along with the Vilnius Stock Exchange and the Tallinn Stock Exchange, form the joint Baltic market, which was formed to reduce investment barriers between the Latvian, Lithuanian and Estonian stock exchanges. OMX Riga is an all-share index that includes all of the Riga Stock Exchange's listed securities. The listings in the exchange are denominated in euros. Latvia's economy is a decentralized economy in Northern Europe that is a member of the European Union single market. Main industries are processed foods, processed wood products, textiles, processed metals, pharmaceuticals, railroad cars, synthetic fibres and electronics. During 2006-07, Latvia's economy grew at a rate of more than 10% per year, but the country fell into a deep recession in 2009. The European Union, the International Monetary Fund and other international donors offered considerable financial assistance to Latvia as part of an agreement to protect the currency's peg to the euro in return for the government's adherence to strict austerity measures. Which was triggered by the failure of Parex Bank, the country's second largest bank. Latvia's GDP increased by 5.5% in 2011, putting it back among the European Union's fastest growing economies. If a non-resident sells shares in a real estate company in Latvia, the gross proceeds will be subject to a 3% tax. For regular shares, double taxation treaties apply. First, with more than 100 regions covered, you can learn more with the Exotic Markets book available on Amazon. Second, you can explore sector and industry intelligence for different countries by going to pervasives.com. If you have an issue in relation to accounting and tax with foreign stocks, you can contact us by going to our website.